a realtor, I always follow a lot of analysts kind of forecasting just to see what the next couple of years hold. And what a lot of analysts are looking at is that in the next 2 years, we're having probably substantial growth for the next 2 years, and then it'll probably start to kind of catch up with the builders. So now is the best time to really catch that last wave of appreciation and growth, and also capitalize on cheap money. Because you being a loan officer, you understand that right now, money's still relatively cheap.
Extremely cheap. It's ridiculous. It's basically free when you calculate inflation and factor for after-tax deductibility. And you can't get money cheaper than this right now.
Right.
So, very good points, very good trends, and it actually goes with what I've said, not this show, but in the past, which is, just like you said, hey, prices are low, it's going to continue to appreciate here, and you're right, for the next 2 to 3 years, looks like we're still in that higher than normal appreciation rates, 8 to 12%. We're usually at 3%, right? So this is unusual appreciation that people that bought in and listened to us 3 years ago that were like, guys, get on this wave, here it comes, are sitting pretty right now and loving life. And that's smart to do, but also you're right about the rates. They're super cheap, and so you can leverage more than you would normally be able to, which is very smart, and it's just about how to make that dollar work for you the best that you can. And here's just one note on that: 8 to 10% appreciation. You get 8 to 10% appreciation in the stocks, right? And let's say you put $20,000 into that, well, you're going to get 10% on $20,000, right? You're going to get $2,000. You buy a $200,000 home with $20,000 down, you're going to get 10% on the $200,000, right?
Right.
So you get $20,000. It's an $18,000 difference. It's enormous difference in wealth. Would you agree, Jimmy?
No, absolutely. So we're in a really special market, and being in a seller's market, the question that I get most often is, what happens when there's multiple offers? Because that does happen a lot.
All the time right now.
Right, absolutely. So the way I always approach it is, yes, it is a seller's market, but that doesn't mean every house you see will be multiple offers. So it's just all goes down to how you approach the problem. Like, whenever you find a house, first you want to check to see, is it priced right? So I always pull comps to make sure that it's priced appropriately. And then the houses that usually get into multiple offers are the ones that are move-in ready. They are priced properly. And then you'll usually check with the listing agent to see where they're at in their, if they have offers, when they're planning to present those offers. If there's no offers, you can still give your best offer, and negotiate a little bit. Sometimes you find homes that are priced maybe a little bit high, and those are opportunities for you to come in and probably negotiate. But if it is multiple offers, then in this market, it's quite common to find people offering, $5 or $10 grand over the actual list price to try to get a home.